Good evening, everyone. I'm Rakhi Gautam from greytHR, the moderator for this Parichay webinar session today. Thank you so much for joining us on this very exciting and the most talked about webinar these days. It's income tax return filing, what every taxpayer needs to know. Now, a lot of you have already joined us. I think we have hit a milestone of having the most of the participants joined us within, a minute of starting the session. We already have 380 plus of you here, and the number keeps, increasing. So thank you so much, for taking out the time and joining us. Now, before I dive into the topic, I would, of course, give you a quick overview of how the session will go. So the session is divided in two parts. The first part will be the presentation by our expert on this topic, income tax return filing. And of course, to make this session even more useful for you, what we have done is we have dedicated a section for you on how your employees can file their ITR without leaving the comfort of the greytHR portal. So, of course, a lot of our valued customers have also joined us on this session. So they would be able to understand how they can brief their employees to file their ITR returns without, leaving greytHR portal as well. Also, to a lot of prospects, a lot of our community members who would want to know more about greytHR and how it can help your businesses go from great to great, GREYT, with exceptional HR services with greytHR, where you get the HRMS product for hire to retire. You get a vibrant community where you can have these knowledge sessions. Please stay tuned, and if you have any questions, if you want a demo or you want to understand more about greytHR or just simply want to understand ITR, please ask your questions in the Q&A option, which is available on the screen. Now, of course, we'll not just have presentations today. We'll also be taking care of your questions that you would have. So after the greytHR presentation is over, we also have a dedicated audience Q&A session planned for you where you can ask your questions, and our expert will be able to help you with all your insights on ITR filing. Whereas if you have any questions on greytHR, we have our product managers joined us today who will help you with that. Now, this session is also currently being recorded. So if you happen to miss out on anything, do not worry at all. We have got you covered, as I always say that. We'll be sharing the recording with you once it is done, probably early next week. And this will also be available on greytHR's official YouTube channel under the playlist Parichay. So you can always go there and watch it later. And now I think we have the quorum with us. Some 500 of you have joined us. So let's start the discussion by talking about what we will be uncovering. I think I have already given a gist of it, but just to reiterate, of course, we understand, right? Filing your income tax return doesn't have to be so overwhelming, right? So whether you are a salaried employee, a freelancer, or an employer yourself, understanding the ITR process is essential to ensure compliance and avoid penalties. And in this session today, we'll be breaking down the processes into simple, actionable steps, from choosing the ITR, the right ITR form for you, and gathering key documents to avoiding common mistakes and understanding refunds or penalties. This webinar session will equip you with the right knowledge and confidence to file your return accurately and on time. Now, to uncover and unpack all those insights, I'm thrilled to have with us today CA Amaranath AS, co-founder of Arush India. Let me quickly take you all through his profile. Mr. Amaranath has around 2 decades of experience in the fields of NRI, HNI taxation, US tax, and labor law consulting. He started his career in the International Executive Services divisions of KPMG Global Services, where he worked on US tax returns and related compliance for expatriates. Prior to starting his own firm, Amaranath worked in the global employer services practice in Deloitte, Bangalore. His expertise includes various facets of global mobility like expatriate tax, social security, PF implications on international workers, ESOPs, immigration assignment structuring, and a lot of other things. So thank you so much, Mr. Amaranath, for being here with us today. Your sessions are always just so great and filled with brilliant insights, and we are just excited for that. And I'll not take any more of your time. I will hand over the session to you to take us to your presentation.
Thank you, Rakhi. Thank you for the introduction. So good evening, everyone. So today's topic is ITR forms, and as Raki already pointed out, this is a need of the hour. So though the due date has been extended, please do note that the due date is not extended for your interest liabilities. So if you have taxes due, then it is highly important that you estimate your taxes or compute your taxes and pay the taxes so that the interest liability or the interest clock will stop in at that point in time. Though you may think that okay, I can file it in the month of September 15, but if there is a taxes due, then the interest will be applicable till September month. So to avoid that, it's sooner the better. But anyway, I mean, do not hurry up. Till now, the 26 years and AIS, CIS are not yet ready from the income tax portal. So it may take a week's time to get updated. So let us deep dive and understand these nuances and the solutions and the challenges now. So let me share my presentation. I think my presentation is visible now to everyone.
Yes, we can see it.
Okay. So basically, I'm trying to cover the key changes to ITR forms. So this year there has been significant changes in the ITR form starting from ITR 1 itself. So you may, I mean, all of you may be knowing it, and it is becoming a buzzing word in social media also that the enhanced reporting requirements have been detailed out in these ITR forms. So let us understand in more detail as to what are the requirements of these ITR forms. Then schedule assets and liabilities and schedule foreign assets. So I will explain in detail as to what are these schedules and what is the coverage and how to report the interest or how to report the assets and liabilities in these schedules and other reporting requirements. So key changes to ITR forms. I have tried to capture the difference between ITR 1 and 2, under what situation you can file ITR 1 and what situations you can file ITR 2 in this slide. So basically coming to the salaried employees, if you have salary or pension or one house property and income from other sources, you can file ITR 1. This has been the case till last year. But this year they have added one more parameter, which is long-term capital gain under Section 112A up to 1.25 lakhs. So this is basically like if you have equity shares and if you have a long-term capital gain from sale of those equity shares, it is exempt up to 1.25 lakhs. So if your total gain is less than 125 lakhs or up to 125 lakhs, you can still use ITR 1. But if it crosses 1.25 lakh, you will not be able to use ITR 1. You have to mandatorily shift it to ITR 2. And if you have any short-term capital gain, there is no such facility in ITR 1. So you must go to ITR 2. And if your income is more than 50 lakhs, so though you may have only salary income and interest income, where ITR 1 may very well take care of your filing requirement. But if the income is more than 50 lakhs, again, you will not be able to take ITR 1. You must go for ITR 2. And then carry forward of losses, then foreign income. It could be anything, could be a bank interest or a dividend income. If you have any kind of foreign income, then ITR 2 is mandatory. Then if you have any investments in unlisted shares, or if you are a director in any of the companies, again, ITR 2 is mandatory. Then agricultural income more than 5,000, ITR 2. Then if you are a resident but not ordinarily resident or non-resident, though you may very well satisfy all ITR 1 requirements, ITR 1 should not be used and you should go to ITR 2. Then comes ITR 3 and 4, may not be relevant only for salaried professionals. But if you have any source under ITR 2, I mean, the conditions to go for ITR 2 is basically whatever you satisfy for ITR 2, all those things, plus if you have a business or professional income or a partner in a firm, then you must go for ITR 3. So even though you are satisfying all the requirements of ITR 2, but you are a sleeping partner or a passive partner in a partnership firm, you must declare your income under ITR 3 because ITR 3 has specific disclosure with respect to partnership firm investments and having a stake in a partnership firm. Then ITR 4, it is basically business or professional income, but you are going for a presumptive income. What is presumptive income? Your entire income is presumed to be a certain percentage of the turnover. So if you are a small businessman and if there is no books of accounts are maintained, then you can go for presumptive basis of reporting of your income and pay taxes. And in those cases, again, ITR 4. Though it is presumptive income, but the income is more than 50 lakhs, again, you cannot use ITR 4, you must go for ITR 3. So this is the ITR forms, but what are the changes this year in these ITR forms? We understood that what forms to be used under what circumstances, but there are certain changes which have been happened to these forms. So coming to deductions and exemptions, I mean, the utility has been released now, but more details are requested, and we will go through all those exemptions and deductions in detail as to what more details are required this year. Then specific sections for TDS. So expected to be pre-filled in the utility if you are using the departmental utility. Of course, it is advisable to reconcile this with Form 26AS. So from the beginning, TDS used to get captured, but from this year onwards, specific sections under which the TDS has been done also need to be reported. That's a new feature, and without that, the return will not be filed. Then capital gains disclosure, as you may be aware, 23rd July 2024, the Finance Act number 2, 2024 made significant changes with respect to capital gains taxation. So from that point onwards, the tax rates and all deferred completely. So there is an option to report the capital gains prior to 23rd July and on or after 23rd July. So this is another change which has been brought into the ITR forms. Then Schedule AS, hitherto till last year, it was mandatory if your income is exceeding 50 lakhs. From this year onwards, that 50 lakhs has been enhanced to 1 crore. So Schedule AL will come into picture only if your income is more than 1 CR. Then earlier, with respect to Aadhaar number, yes, Aadhaar number was anyway mandatory. But if Aadhaar number was not available and the person has applied for Aadhaar, then Aadhaar enrollment ID was accepted for filing the return. But from this year onwards, having Aadhaar number is mandatory. So if you or your family members, if they do not have Aadhaar and if you are planning to file tax return for them, please apply for Aadhaar now and get the Aadhaar number before you file the return. Otherwise, you will not be able to file the return. So then other changes, what has been brought into these ITR forms, buyback of shares. So again, Finance Act 2024 made amendment to the buyback of shares. Till whatever the buyback has happened post 1st October 2024 is taxable as income from other sources. Earlier, it used to be exempt in the hands of the taxpayer, and the company used to pay tax on that. But from 1st October 2024 onwards, if any buyback has happened, in the entire proceeds or the entire money what you get from the company has to be taxed under income from other sources. So what happens to my investment? Because I have bought the shares in the market or I have subscribed for the IPO and then I have got the shares. But through this buyback, of course, I have received the money. But what happened to my initial investment? If I tax entire thing under income from other sources, so what happens to the cost of acquisition? So the clarity has been provided and the provision says that the entire cost of acquisition need to be considered as capital loss. So it could be short term or long term, depending upon the holding period of the stock. But the entire cost of acquisition need to be reported as capital loss, but the entire proceeds from the buyback need to be reported as income from other sources. Then disability certificates under Section 80DD and 80U need to be reported. Earlier also there was a mandate to file one form for this, but now disability certificate from a certified doctor has to be reported now. That the number need to be reported. Then while filing ITR 3, 4, and 5, which are basically for business income taxpayers, and if they have to confirm whether Form 10IE has been filed in the prior year, or if they are switching for the old regime in the current year, then they have to file that form. So those details have been captured in the new ITR forms. Then gains on unlisted bonds or debentures under Section 50AA, specific line item is included for long-term capital gains unsold prior to 23rd July 2024. Yeah, let us see these exemptions and deductions. What are the details which are being asked for? So you may be observing the changes which have been happened and how the tax department is tightening with respect to these exemptions and deductions. There were many instances where the department has identified that these expenses are not actually incurred by the taxpayers, and these have been reported in the income tax return, and they have claimed benefits out of these exemptions and deductions without even incurring or paying these expenses. So they send them the notices, and they ask them to file updated returns. They levied penalties and interest. So to curb these things, and also another important aspect which we need to keep in mind is the new regime. So under new regime of taxation, no need to maintain, no need to claim. I mean, these exemptions and deductions are not eligible to be claimed. So no need to maintain any receipts on these things. Maybe in a with a view to encourage the new regime and also to curb these practices from the taxpayers. So they are asking more and more information under the old regime exemptions and deductions. So taking HRA as an example, the additional details which have been asked for is the place of work, exact rent paid, actual HRA received by the employee, then detailed salary breakup, and then whether metro or non-metro. So all these five parameters were never asked in the income tax form, but from this year they're asking these particulars as well. So then comes the medical insurance under section 80D. Under 80D, earlier we can just mention the total amount of insurance and the return used to get filed. But now insurer's name and also the policy number, both are mandatory. And then the educational loan under section 80E, they're asking lender name or the financial institution's name, loan account number, sanction date, sanctioned amount or outstanding amount, and total interest paid during the year. So you can look into that. What is the level of details they are getting into? I mean, the education loan details, whatever they are asking, everything is available in only in the loan statement only. So instead of asking the loan statement, they are asking all these parameters. So it is as good as I'm giving complete picture about my loan or my expense details to the tax authorities. So as of now, we do not know whether these will get captured in AIS or TIS because this year AIS, TIS are still in the process. They are not yet released. So if it is coming in the AIS, TIS, it is well and good. You can just verify and submit the tax return. If it is not coming in AIS, TIS, please ensure that you have the statement. You have collected these statements from the bank if you have any loans, and accordingly, you are providing all these details. Then these enhanced reporting requirements also applies to home loan interest, electric vehicle loans, and electric vehicle loans. So whatever we discussed, like the lender name, loan account, sanction date, sanctioned amount, outstanding amount, and interest paid, all these are need to be reported even in case of home loan interest and also electric vehicle loans. And home loan interest do not confuse with section 24. These details are asked for 80EE and 80EA sections, but not for 24 housing loan interest under section 24. Then specified diseases, they're asking disease name and other details such as the certificate number, which I already spoke to you. So these are the further details which are asked under section 80 DDP and 80U claims. So ITR-U is another update. This is not related to the ITR which you are going to file now, but ITR-U is applicable when there is no room for you to go in the regular way of filing the return if the dates are elapsed. So even the December 31st is the due date for revised return. Even that has been elapsed. Then you can take ITR-U. Through ITR-U, you can report your income and file the tax return. But however, ITRU comes with its own features. The very first thing is the penalty. So if the delay in filing the return is 1 year, the penalty is applicable at the rate of 25%. If the delay is 2 years, the penalty is 50%, and 3 years, 60%. And if the delay is 4 years, then the penalty applicable would be 70%. And also ITRU can be filed only when there is a taxes due. If you have a refund, then ITRU will not be supporting you. So you have to take another route where you have to apply a condonation of delay with the Commissioner of Income Tax and get the permission and then file the tax return if there is a refund. So it is very important that you file the tax return within the due date and revise it if you find anything, any observations you have come across where you have missed out something. It could be reporting or income. And for revised return, you can file before 31st December of the assessment year. So beyond that, there is no room for you to file either the revised return or the original return. So you must go for ITRU. And I already explained ITRU comes with its own features and challenges. So here comes the first polling question. So Rafi, is it possible to roll out the poll?
Sure, sure. I'll do that right away.
Yeah. So basically,
Okay.
Ram has, yeah, sure.
Oh, please go ahead.
Yeah. See, Ram has salary income and just the interest income from savings account, but there was a buyback of shares for him post 1st October 2024. He has no other income, very straightforward. It is just the salary and interest income and buyback of shares. So which form should he be using? Whether it is ITR 1, 2, 4, or none of the above. So we already discussed that buyback, what is the implications if it is happened post 1st October and if it happens prior to 1st October. So in this case, the buyback has happened post 1st October. So which form he can use? And it is just he has salary income and interest from savings account.
Okay, we'll have it for another 10 seconds. The rest of you who haven't participated, please do. And, help us understand your choice on this question. Okay, I see a lot of thumbs up of people who have participated. Great going. Thank you so much for your participation and engagement. Okay, I'll end the poll now and share the result with all of you. Over to you, Amaranath.
ITR 1. Okay. So ITR 1, 59%, ITR 2, 29%, ITR 4, 7, and none of the above 5%. So the correct answer is ITR 2. I think 29% have answered it correctly. So though he has only salary and interest income, I mean, if he had only salary and interest income, then it is ITR 1, but he had buyback of shares also. So what happens in the buyback if the cost of acquisition, as I already explained, goes as a capital loss? So if there is a capital loss, then ITR 1 cannot be used and you must go for ITR 2. So ITR 2 is the correct answer. Yeah, then comes the Schedule AL. Schedule AL stands for assets and liabilities. So though you may have reported all your income, you might have captured all your income from Form 16, you might have gone through your 26 AS, AIS, CIS, everything, and you have captured all the income. But AL is not with respect to the income, it is with respect to the reporting requirement. So if your total income exceeds 1 crore, all your assets and liabilities need to be reported in the income tax return. All assets include your real estate properties, could be buildings and lands and bank balances, and then the paintings if you have anything, then your jewelry, then cash on hand, and also liabilities would include the loans which you have availed from other persons. It could be from financial institution, banks, or even private loans. All those need to be reported. Until last year, this reporting requirement was applicable if the income is more than 50 lakhs, but this year onwards, it has been extended to 1 crore, above 1 crore. So in case of resident and ordinary residents, global assets and liabilities need to be reported in this schedule. Yeah, I mean, many people will assume that I have schedule FA, foreign asset reporting for resident and ordinary resident. So why do I report that in AL? AL is only for India assets. That's not the correct view. The form instructions are very clear and also the rules are very clear. Schedule AL requires reporting of global assets and liabilities. Your foreign assets also need to be included here. It is a duplication because I'm reporting in both FA and Schedule AL, but still that is the requirement. The purpose of Schedule AL is entirely different than Schedule FA. So the instructions says that the global assets need to be reported in Schedule AL, provided you are a resident and ordinary resident. In case of resident but not ordinary resident and non-residents, only India assets need to be reported. No need to report foreign assets or global assets in Schedule AL. So assets have to be at the end of the year. And See, what happens? I mean, during the year, I may own a property. As on April 1st, I have a house and I've reported this house in the prior year return. But in December, I sold this house. As on 31st March, I do not have this house. Whether do I need to report this? No need to report this because this is Schedule AL is always the assets or liabilities as on 31st March. Similarly, if you have repaid the loan during the year, even that need not be reported in Schedule AL. And all the assets need to be reported at cost, not the market value or the value declared in the latest wealth tax return. Wealth tax returns have been wealth tax itself has been abolished from past. It's been 10 years. So I really doubt whether there will be a wealth tax return for the assets which you are holding as of today. If it is not available, then it is actually the purchase cost. So what happens? I mean, many my clients also ask, I have jewelry, so how do I value that? Do I need to go to a value or a jeweler to get the valuation done and all? No need to go anywhere. So if you have the invoices and if you remember the cost, definitely will remember the cost for the jewelry or any other asset. So just report the values, those values in Schedule AL. And if the property is acquired through inheritance or gift or any other modes where you have not paid any money to buy those assets, then it is cost to the previous owner. And if the cost to the previous owner is not ascertainable and no wealth tax return was filed, then it is circle rate as on the acquisition date by the taxpayer or the assessee or 31st March 2020. So circle rate is nothing but the stamp duty value, but the bullion rate is nothing but the value for jewelry, that is gold and silver. So then comes Schedule FA, and this is Schedule FA. FA stands for foreign assets. So all your foreign assets, I will explain the major assets or the investments or the accounts which you are going to, which needs to be declared in the return in detail in the coming slides. But as of now, let us understand the key consideration or key important points with respect to foreign assets. So applicable to HUFs as well. So mandatory if you are a resident and ordinarily resident. If you are a non-resident or RN or resident but not ordinarily resident, there is no need to report foreign assets. Only India assets under Schedule AL if you report, that is enough. And there is no threshold of income for foreign asset. So if you see for Schedule AL, only if the income exceeds 1 CR need to be reported, but there is no such threshold for FA. Your income may be zero as well, or 10 lakhs. And finally, the tax liability may not be there after considering the deductions or exemptions or the reliefs. But if you have a foreign asset, that needs to be reported mandatorily. So reporting is for the calendar year. Here it is not the financial year. And Schedule AL, I told you that as on 31st March, but this is reporting is for the calendar year, which is Jan to December. Irrespective of the country where you have the reporting period need to be considered is Jan to December. All the assets need to be reported at cost. Again, this is not a market value. The purchase price or the cost need to be reported in the Schedule FA and the assets held at any time during the year. But whereas Schedule AL, it is only at the end of the year, whereas that is 31st March. But this is not 31st December. It is the asset held at any time during the year. At the beginning of the year, you may have the asset. You might have sold that asset during the year, but that still need to be reported in Schedule FA. As on December 31st, you may not be holding that asset, but still you need to report that. Then exchange rate for conversion, because the cost of these assets would be in foreign currency. So what is the exchange rate should I use? It is SBI TT buying rate as on the date of investment need to be used as an exchange rate. So you may be wondering, where do I get SBI TT rate? Is it available online? It is available online, but that requires certain research on the websites. If it is not available, my advice is just take the rate which is prevailing or on the date of investment and then report it. It need not be SBITT buying rate. So just applying an exchange rate and reporting is better than not reporting at all, just because you do not have SBITT rate. So all foreign assets need to be included in AL as well if you are a resident and ordinarily resident. So the very first thing which comes in the Schedule FA is the foreign depository account. So what is this foreign depository account? It is nothing but an account having in a foreign bank. Could be savings account or a current account or a checking account or time deposit that need to be reported. account number, owner, peak balance during the year. During the year means again it's a calendar year, which is Jan to December. Closing balance and the interest income, if you have received anything, that also need to be reported in this schedule. So then comes the foreign custodial account. So what is custodial account, or how is it different from depository account? The custodial accounts are not generally with banks. It's with the financial institutions or investment advisors like investment brokers, Morgan Stanley or E-Trade, these kind of institutions. If you have cash balance in those institutions, that need to be reported as custodial account. All other details are very much similar to depository account. So custodial account is basically an account which you are holding not with the. Then comes the foreign equity and debt interest. So what is this foreign equity and debt interest? Is basically if you have any investments, equity investment in an entity in a foreign country, or if you have given any loans to the anybody outside India, that need to be reported in foreign equity and debt interest. Then comes the financial interest in any entity. So what is financial interest? Financial interest is basically again an equity interest in any foreign entity. So a question may come whether if I have an equity interest, whether I report in foreign equity or foreign financial interest. So my view is you can report in either of these schedules. It doesn't make any difference. At least report in one of these schedules. A common item which has been missed out by the employees in these foreign asset reporting is the ESOPs or RSUs, which has been listed abroad or which is not listed, but it is related to their parent company or a holding company which is situated outside India. So if you have these assets, their subsidiary may be in India and you may be working for that company. But if the shares are belong to the foreign company, which is a holding company, then that needs a reporting in Schedule FA. Many notices are coming. They have tax authorities have issued a number of notices on these things, and there are cases where the penalty is also levied for not reporting. We will look into those in the coming slides. So those stocks, if you are holding it, that needs to be reported. Either you can report in foreign equity or you can report in financial interest. I generally report it as the foreign equity interest. So then foreign financial interest includes share or voting power in a corporation, interest in a partnership profits. It's not only the not only the RSUs or a ESOP or a equity interest in a company, even if you have any partnership form and if you are stake in the partnership form, that also needs to be included foreign in financial interest in the entity. Then comes any other asset. So you say, for example, you have mutual funds abroad, ETFs abroad. So where that need to be reported, that need to be reported under any other capital asset or retirement accounts, especially US such as IRA or 401k. This also comes under other capital asset. So if you have any business assets abroad, those assets doesn't require any reporting. It's only your personal assets need to be reported. And brokerage accounts. See, brokerage account also may have equity interest or a financial interest or a mutual fund. It may be combination of everything. Like you may have some 10 different mutual funds, some 10, 15 stocks, and you may be trading on a frequent basis. So it is highly impossible to report those in financial interest or equity interest. So my advice to you to report those kind of accounts is in the other capital asset. Of course, each and every schedule, sub-schedule goes on asking for information about the acquisition dates, total investment, income received from those investments, etc. So that needs to be reported in detail. So then comes the accounts where you have a signing authority. This is basically applicable to CXO people with the vice presidents or a CEO, CFO. The account may be held by the company or the entity, but the person is a signatory for that, authorized signatory for the accounts. Though the account does not belong to him, that requires a reporting in his income tax return, in his personal income tax return. So please be mindful that maybe either you or your heads in your companies or CXOs in your companies may have this, and please highlight this to them and ensure that this is being reported in their personal income tax returns. Hitherto, we saw all other investments or the assets which need to be reported along with the income generated out of those assets. But there is some income where it is not being generated out of an asset, but you have that income which is foreign source. Basically, you may have a salary income from a foreign country, or a pension, or a retirement benefit from a foreign country, or a business income. So those kind of social security benefits. So these kind of incomes comes under Schedule FA and other income. This is not an other asset. So this is other income which does not fit into any of the above categories. You need to report that under this subschedule. So what are the practical challenges? Schedule FA is not as easy as we look into or as easy as it appears. First of all, it appears very complex. And also when you look at go on filling that, you may encounter a lot of challenges. One is calendar year versus fiscal year. So generally the data we are tend to keep it on a fiscal year basis, April to March. But this is an exception where you have to report on a calendar year basis. So it is important that you log into your portals and, download the reports for Jan to December and then provide those statements to your CA or a tax consultant where he can use that information and file the return. Then ESOP and RSUs, I mentioned that this is a very important thing where you have many employees may miss out on this. So the question is whether the reporting occurs at the time of grant, vest, or exercise. So if it is an ESOP, exercise is the taxing event. So if it is exercised, then you need to report that asset or that those shares. And in the case of RSUs, vesting is the taxable event. So if it is vested, then you need to report. If it is only granted but not vested, no need to report those shares in the Schedule FA. Reporting under a different table within Schedule FA. Like as I already explained, some assets like it may fall into equity as well as financial interest. So where to report? Anywhere you can report, but there is no clarity on these things when you look at the instructions of the Schedule FA. So then whether a minor is required to report foreign assets, people who have settled, who were abroad for some time and they have migrated back to India to settle down here, their children may have these bank accounts. So the thing is whether is it mandatory to report Schedule FA. I would suggest that please go ahead and report on a conservative basis. There is no clarity here, but it is highly advisable that you report that as well. So do I need to report only income generating assets? Definitely no, all assets need to be reported. The reports may not show the cost of investment. Yes, so this is a practical challenge. Many stock broking accounts, when you see the cost of investment may not come. Of course, if you have, well and good, go ahead and report the cost of investment. If it is not available, whatever the value it gives, could be the market value, at least try reporting that itself. I mean, without missing out, at least report the market value, whatever the report value the report gives. So joint ownership of assets. So both wife and husband might be having the bank accounts. In that case, both of them have to report the same account in both their returns. I mean, it is not that only the primary holder has to report. So I'm a secondary holder, I'm a spouse, so no need to report. No, that is not correct. So both of them have to report this. So what happens in Schedule FA? The consequences of non-compliance for not filing the tax return or 10 lakhs. So you have filed the tax return, but you have failed to report the foreign assets. Again, the penalty is 10 lakhs. So penalty cannot be levied if the total value of all your foreign asset does not exceed 20 lakhs. So 20 lakhs is the limit which is given, but this cannot be considered as an exemption from the reporting itself. What the law is saying is, if it is less than 20 lakhs, then penalty will not be levied. So, but the prosecution may be invoked. But I mean, practically, I have not seen any case where the tax authority is so stringent that they have invoked prosecution just for the value of the assets is 20 lakhs. Practically, yes. I mean, it is. However, this cannot be taken as an exception, and don't take it as an exception and not to report the assets. Even if it is less than 20 lakhs, my advice is to go ahead and report it. And the prosecution, then imprisonment, which may range between 6 months to 7 years. So then comes the other reporting requirements. Raki, I just take another 5 minutes, not more than 5 minutes. So
So,
unlisted, yeah. So unlisted equity shares, there is a separate reporting required. So you may be presuming that I have reported in Schedule AL and it is a foreign asset, not listed anywhere. So I have reported in Schedule FA as well. So you have to report even here, unlisted equity shares. It is not only foreign, even if you have Indian stocks which are unlisted, there is a separate schedule for that. Please go ahead and report that. Then directorship information. If you are a director in any of the entities, then there is a separate reporting requirement for the directors as well. So please ensure that you are reporting your directorship information in this schedule. Yeah, this is the another polling question. Raki, do you want to roll out the poll, or I shall just discuss this?
Sure. I'll launch the poll.
Okay, thank you.
Okay, here we go.
Yeah, here the stocks were acquired through ESOPs and the company is not listed in India but listed abroad. So does this need reporting in the unlisted shares schedule? So what is your view here? Because the shares are not listed in India, but listed abroad, like many companies, Microsoft, HP, Amazon, Google, none of those stocks are listed in India, but they are listed abroad. Does it fit into the definition of unlisted shares? And do you need to report them in the unlisted shares schedule?
Okay, another 15 seconds for the poll. I would urge each one of you to participate, please. Thank you. Okay, I'll share the result now.
Yes, requires reporting in unlisted share schedule. 82% does not require reporting in the 18%. The correct answer is no, not required to be reported because it is listed abroad. So there is a separate clarification in this regard. When they mean about unlisted shares, this is only for the reporting purposes, but do not consider this definition for reporting of capital gains. So that's a different thing altogether. So just for reporting of unlisted shares, if the shares are listed anywhere in the world, then it will not fall under unlisted shares category for reporting purposes. So no need to report in this unlisted shares schedule. So as I said, there is a separate circular which clarifies many things with respect to unlisted shares and directorships. So I have listed those here. So one is we already discussed. So shares listed in the foreign stock exchange are not required to be reported. If you are a non-resident or a resident but not ordinarily resident, are you still required to disclose foreign directorships? Yes. If you are a non-resident also, if you have any directorships abroad, you have to disclose that in the ITR. Stocks were previously listed but delisted subsequently. How do I report PAN? If PAN is not available, you can enter in 5 N's followed by 4 zeros and then again followed by 1 N. So unlisted shares are acquired or transferred by way of gift, will, amalgamation. How do we report the values? You can enter 0 for this. And unlisted foreign company shares are reported in Schedule SA. Does this need to be reported? I already mentioned, yes, this requires again reporting in Schedule unlisted shares as well. So unlisted shares held as stock in trade in the business. Does this require reporting? Yes, that also requires reporting in the unlisted shares schedule. Yeah, so what are the common documents? As we all know, Form 16 for salaried employees, and then Form 26 AS, AIS, TIS, and capital gains statement. Though your AIS and TIS gives you the capital gains information as well, it is highly advisable that you recheck with your statements and then report accurately these numbers in the tax return. And AIS, TIS, many people, as in the initially at the beginning itself, I said you may hurry up doing the filing the return. Please do not do that. Ensure that you may fill the return, keep the draft ready, and once the AIS, TIS is updated, then cross check with that and then file the return. In many cases, what happens if there is a discrepancy between the return and the AIS information, either you receive a notice or the return itself will be considered as defective. And the defective return notice, if it comes after the due date, then you have to again file it as a belated return and pay the penalty of 5,000 rupees. So to avoid all these practical issues, it is highly advisable that you start filing your return once AIS and TIS are updated. Then mistakes to be avoided, as I already said, not reconciling with AIS, TIS, then not validating your bank accounts, especially when there is a refund. Because earlier I used to choose the bank account where I need to credit in my return, but from last year onwards, that has been dispensed with. So though I select the bank account that may not be used for refund credit. So update your bank accounts in the income tax portal and also ensure that the bank accounts are validated. If it is not validated also, you will not receive your refund. Then another thing is not reporting Schedule FA and foreign source income. So the penalties are 10 lakhs and another 10 lakhs. So it can go up to 20 lakhs penalty. So to avoid all this, please ensure that proper reporting is done in the tax return. So that's all I have for today. I think I overshoot the time as well. But
No
yeah,
problem at all. Thank you so much for that very comprehensive presentation, Mr. Amarnath. You pretty much
thank
covered
you.
everything from different idea forms to, actual practical examples that help us understand better. And of course,
Yeah,
the mistakes that we should definitely avoid, the deadline and all of that. So thank you so much. But I understand that
thank
this could be a little too much to
yeah,
grasp in one go. So that's why it's
correct.
good to know that we have the recording with us. So
Sure.
anybody, asking if they'll get the recording, yes, you will all get the recording, and you can, watch it again later. And we will be sharing a thank you mailer with all of you, which will have the credentials of Mr. Amarnath, his email ID. So you can always, reach out to him directly in case you have any questions. The email ID and the phone number is also displayed on the screen. It was. So if you want to take it from there, please feel free to. Now, there's a lot to cover still, so I'll not take any more time and hand over the session to Mr. Shobit Gaur. He's the product marketing manager at greytHR, and he's just going to help you understand how all of this can be a little more easier for you through the greytHR platform. Over to you, Shobit.
Thank you. Thank you so much, Raki. And thank you for inviting the product team to this milestone event as well. Very grateful. And Amarnath sir, I think, the depth of knowledge that you have, I think GPTs would be, little shy of you. The kind of knowledge that you have. There's so many people on
Thank you,
behalf
thank
of
you.
more than 600 people in the audience. Thank you so much for giving this away so easily and so graciously. And now, without like any more minute, I'll just quickly share my screen. I also have a presentation that I will walk you through. I hope my screen is visible, Raki, or I'm not sure.
Yes, it is. Please go ahead.
Awesome. So we at greytHR, we really want to simplify your tax filing journey. From the last 30-40 minutes, we understand that there are so many things to be taken care of, right? Uh, and we want a future where tax filing is stress-free. It is actually very, very quick and without any error. So in my section, I will explore how greytHR can make that happen for you. Before I go to the solution part, I would be remiss if I don't talk about the ground reality, right? In the last slide for Amaranath sir, I think there were certain common mistakes that he was talking about, certain common penalties that could happen, right? So tax filing is full of those. If you're not careful, if you don't verify and check the information that you're filing, you could be in danger of getting a penalty, right? You could be filing your taxes after the deadline. There are so many things that could potentially happen. I think all of us get a little lost when we face the world of taxes, apart from Amarnath sir, of course. Like I said, penalties can lead to your BP shooting up, your stress sort of going up. Going through these multiple sort of different forms and platforms is not only a time consuming, but again, like a stressful process. And where do we come in? What is our solution? So what we offer to our customers is basically a hassle-free way to India's top tax filing applications. These applications come in and help you at every single stage of your tax filing journey. So you don't have to worry whether you're following all the correct norms and rules and regulation. In case you're not, they will flag it for you. You will be able to double verify and check, before filing your taxes. So, you don't get any notice from the income tax after you file your taxes. We basically made sure that we've made it very, very easy for you. And a complete, secure, and vetted way for you to access these applications. Don't have to go out in the market searching on your own. We have done the hard work and the homework for you, so you can step back, relax, and just focus on filing your taxes. We've tried to make sure that we do a lot of your manual routine work by taking your data and behind the background uploading in these tax filing applications, so you can actually do the tax filing process instead of in days but in like minutes, literally. One last point that I want to share with all of you is, uh, anywhere you go filing your taxes, we guarantee you get a better pricing with us when you take this particular path. These applications actually give special exclusive pricing to greytHR customers, right? So all of this kind of sounds very good to be true. Who are these applications? We currently have two applications in our marketplace which promise and deliver a seamless experience. I think name number one is ClearTax, which a lot of you would be familiar with. It is India's largest tax filing platform. Till last year, one of the stats says that 3% of the overall tax filing in India was done through ClearTax. And the other contender in our marketplace is an app called Tax Spanner. They're not lightweight at all. They've been actually pioneers in tax e-filing in India going back to 2007, right? So if you're choosing these options, you can rest assured you're going with the correct choice, right? Now, I've told you about the benefits, I've told you about the name of these applications as well. I want to stress on this particular point very, very much. These are real results that these applications actually give out. You can trust them. What you're seeing in front of me is not something that you should just take my word for it. These are real customer feedback that we got, uh, explaining to us, telling us that their employees got a lot of cost saving done, and more employees actually were able to file their taxes. To give you a hint, we had more than 300 enables for tax filing applications till last year in the last tax filing season. And more than 100 people actually filed their taxes through the applications. So in case you want to, you can do this particular year. I want to take this moment to just tell you, how do you make all of this happen? It's actually three simple steps. If you can see my screen, there's animated all around. All you need to do is go to greytHR's Unite marketplace, search for either Tax Spanner or ClearTax, enable the application, and tell your employees about it. That's it. It's three simple steps. Now my presentation is done, my section is done, but I do want to tell you one last thing before I leave. It does not have to be stressful. We have made sure we've given you enough convenience to actually proudly say that tax filing is easy when you go through greytHR. Thank you so much for your time. Back to Rakhi.
Thank you so much, Shobit, for that. I'm sure that was grateful, greatly helpful for our audience today, especially our customers who are already using the greytHR platform and can, in fact, get upgraded to using Unite Marketplace that comes with ClearTax. So thank you so much for this once again. And now, as promised, we'll not leave you here just yet. We have the audience Q&A, and of course, you have dedicated 55 minutes with us. We're here to take your questions also. I'm just going to read out the questions which are there on the audience Q&A right now. But in any case, if any question is not answered due to the time constraint that we have, you can always go back to the recording also. I'm sure a lot of those pointers were already covered in that. And also, as we promised, we'll be sharing Amaranath's email ID with you. So you can always reach out to him directly and have those, questions cleared up. So without taking another moment, I'm just going to read out the question. So just starting off with the first very question that we got around 4:10. I'm sure as I read through, some of that would already have been covered in the presentation,
Yes,
but we'll just,
that's fine.
quickly take that up. Okay, so this question is from Naveen Kumar. for 20 lakh per annum package, which ITR we need to file?
See, it all depends on the kind of income, because it is not only the number which matters, but what kind of incomes you have. Assuming you have only salary income or could be only some interest income, then it is ITR 1. But if you have any capital gains or anything like that, you should go for ITR 2.
Understood. Thank you for that. Just a moment. Okay. Next question is from Vamsi. What is presumptive income means?
Okay, see, presumptive income generally applies to business income or professional income. So a certain percentage is being prescribed by the Income Tax Act itself, saying that if you are in a profession, 50% can be assumed as your income and 50% is expenses. So if you have 20 lakhs of income, then you can offer only 10 lakhs to tax, assuming your other balance 10 lakhs is expenses. So that is called presumptive income. So you're determining your income based on a presumption of percentage rather than actually calculating what your income and expenses are. That is why it is called as presumptive income.
Thank you for that. Next question is from Mr. Bisan Shah. By which state can we start filing the ITR?
So you can start filing even now as well if it is ITR 1 and 4, because utility is not yet released for ITR 2 and it is expected shortly. However, my advice is to wait for AIS and TIS to get updated and then reconcile and file. But generally, AIS and TIS will get updated by mid of June. So you may just wait for one more week and then see.
Understood. Next question is actually asking about this presentation and session. So you'll all be getting the recording, Lavanya, and you can go through this presentation in that. Moving on to the next question. There are some questions without context, so we will avoid that. In case you still want to ask them and it's not cleared, you can rewrite those questions. So this question is from Gokula Krishnan. For medical insurance, my policy number is changed recently. Should I use my last policy number while filing, or should I use the current policy number? I have two insurance. One is from corporate and another is personal. Both are separate companies. How do I proceed?
So for change in the policy number before 31st March, whatever policy was in effective, use that number for the return. And two insurances, of course, you can insert one more line item in the utility and then give both the insurance details, policy details, and then input both the amounts.
Understood. Thank you for that. Next question is from Bhavin Shah. In the new tax regime, do we need to not file the housing loan related documents?
That's right. Yes. In the new regime, that is not eligible for deduction. So no need to fill in these details.
Understood. Next question is from Pankaj. At time we received dividend against company shares, which are very low, 2 to 5 USD. Do we need to disclose even such transactions also, or can it be ignored?
Yeah, it is a very good question. See, there is no threshold for foreign income to report. So even if it is $1, I would highly recommend that please go ahead and report that in the relevant schedules. Also, the shares, whatever on which you are getting the dividend, even those need to be reported on schedule. Yes, yes. So in this case, both income need to be reported for tax purposes and also the asset need to be reported under schedule FA. I have seen cases where even for $1, the notices have been received by the taxpayers. So to avoid such notices, please go ahead and report irrespective of the amount involved in them.
Okay. Next question is from an anonymous attendee. If I invest in mutual funds and stocks, can I show them an old regime for tax savings? Or is there any limitation in investment in stocks and mutual funds in a given financial year?
Mutual investments in mutual fund and stocks does not have any relation to old regime or new regime. In both the regimes, you can show whichever is more beneficial to you. And as far as I understand from a tax perspective, there is no limitation in investment in stocks and mutual funds.
Next question is from Veera. Small clarification regarding filing TDS and generation of Form 16. Is it mandatory to link Aadhaar and PAN card for uploading into TDS portal? If yes, are there any alternatives available which we can avoid linking?
No, I do not think there is any other alternative. Please ensure that your employees are having this Aadhaar and PAN is linked, and this should be one of the points at the time of onboarding itself is my suggestion. So in your onboarding checklist, please provide to your HR this one more point and let them ensure that these both are linked. That is the only option. I mean, I do not see any other alternative available.
Next question is from Arunachalam. If invested in a unit-linked insurance product held by an investment firm abroad, where should it be reported?
So there is a separate subschedule under Schedule FA for reporting insurance products or insurance investments. So you can report this under insurance product. If you think that this is an investment and it does not suit because it is unit-linked insurance policy, if you do not think it is falling under insurance, then you can report it under other asset. At least report somewhere in the Schedule FA.
Okay. Next question is from Omesh. You mentioned that if one is filing ITR 3, then you have to declare some 10E filled in previous year. Please clarify what is this.
It is not 10E, it is 10EA, 10IA form. See, under by default now it is the new regime. So if you are if you are going for old regime and if you are having business income, then the form should have already been filed in the prior year if you have opted for that. So those details need to be given. And if you are opting out this year, you have an option to opt out only once in a lifetime. So if you are opting out, again, those details are also need to be provided in ITR 3. That is the details it is going to ask you.
Understood. Thank you for that. Next question is from Samir R. Shimpi. What is FA/FSI?
FA is foreign assets and FSI is foreign source income. So we discussed that. So if you have any of these, please report it in the tax return.
Okay. There's actually a feedback from Girish Kumar Ravindran Nair. Awesome session with 3 exclamatory marks. Recording is available, right? Yes. Thank you so much,
Thank
first
you.
of all. Girish,
Thank
and
you.
of course, thanks to Mr. Amaranath, and recording will be shared with you. Okay, moving on to next question from, okay, there's a lot of recording questions. We will be sharing these recordings. There is one anonymous attendee. The question is actually on greytHR. So I would request if Shobit, you can take this one up. Will greytHR roll out features on the platform that allows to report all of this from income tax, even foreign income?
Shashank, if you're in the call, does foreign income come in here with us? Raki, let me actually give the question, take some time and answer the question.
Sure, no problem at all. Since it's an anonymous attendee, maybe the one who has asked the question, if you can share your email ID and name with us, maybe we can, take this offline and also take you through it, comprehensively. Thank you for the question. Moving on to the next question from Mehak Amit Punjabi. As I am a salaried individual, female and below taxable, but TDS is detected. So which form has to be filled to claim the rebate?
So if the TDS is deducted, again, if it is only salary income, then ITR 1 would be sufficient. So, but you must file the tax return to get the TDS as a refund. Yeah.
Okay. Next question is from Praveen. What will be the maximum limit of getting marginal relief on rebate? Like tax cannot be more than extra income earned.
Does greytHR takes care of it in calculation is the question.
Yes. So maybe we can take it after this question, the first one.
Yeah.
So,
okay. So what would be the maximum limit of getting marginal relief or rebate? So see, for last year, it is 7 lakhs is the maximum rebate. With the income can be up to 7 lakhs, but if it exceeds 7 lakhs, then the taxes will be calculated from as the normal slab rate.
Understood. Also, Shobit, to you, if you want to take this one up, does greytHR help in taking care of its calculation?
Can you repeat the question, please?
So the question is, what will be the maximum limit of getting marginal relief on rebate? Like tax cannot be more than extra income earned. And does greytHR take care of its, in calculation?
No, so if anybody is going through the route of either clear tax or tax panel, these are the applications which come in and they share that particular information.
Okay. Thank you for that, Shobit. Next question is from George. Agricultural income is higher than 5,000 along with salary income. In this case, which form to choose for ITR filing?
Since agricultural income is higher than 5,000 rupees, then it is ITR 2 need to be filed.
Okay. Next question is from Oma Maheshwari. My CTC is 7,08,000 and home loan I've taken for 30 lakhs in 2024 to build a commercial building. which regime I can choose for 25-26?
Generally, I mean, on the face of it, we may not be able to specify which regime would be better. But considering your CTC, and I'm not sure because it's a commercial building, what is the rental income you are getting? Mostly, the new regime may be beneficial.
Next question is from Ati Mulam. Will ESOP come under salary or capital income?
So when you exercise the ESOP, it comes under salary. But after exercise, you will become the owner of those shares. And when you sell those shares at a later point in time, then it comes as a capital gain. So there are two taxing events for ESOP. One is salary at the time of exercise, and then at the time of say capital gain.
Thank you for that. Next question is, can we file ITR even if we don't have Form 16?
Yeah, as I mentioned, it is not advisable to do that. Ensure that your salary income, I mean, whatever you report matches to your Form 16 and 26 AS. So just wait for 1 or 2 more weeks and the forms would be available.
That's true. Next question is from Mohammed Goose. Which ITR should be filed for consulting services if I'm a freelancer?
If you're going for the presumptive income basis, then ITR 4, otherwise ITR 3.
Next question is from Satvir Singh. What is covered under section 1014(1), allowances referred in subclauses A to C of subrule 1 in rule 2BB, and what proofs can be submitted for this?
So what is covered under section 1014(1) allowances referred in subclauses A to C? Basically, these are like your expenses on a tour or transfer, then uniform expenses. So these expenses, I mean, these should be there in your payroll structure, first of all, to claim the exemptions. So if you have to claim the exemption, then the employer has to grant these exemptions at the time of payroll itself, most of these at least. So if your employer does not have these in your salary structure, then I don't think you can claim these exemptions. And what proofs can be submitted? Your employer would have prescribed in their policies, and you need to go along with that.
Sure. Next question is from Sarath N. Is there last date to share the Form 16 with employees?
Yeah, the due date for issuing the Form 16 is June 15th.
Thank you for that. Next question is from Neeraj Gupta. If anyone is having any designation and is also signing authority in NGO or a society trust, does it also need to be reported?
If it is within India, then there is no reporting requirement. But if that NGO or society trust is abroad, outside India, then there is a reporting requirement under Schedule FA.
Okay. So we have already reached 5:08. We'll take another, say, I will ask Mr. Amaranath you only. Can we extend it to another 10 minutes? We'll try to cover as many questions as
sure.
we can. Yeah. Okay. Yeah. So see,
Go.
we are trying to cover all questions that you have asked, but we have some 100+ questions with us. We have already pretty much covered, I think, 50 to 60% of it. But we'll try to cover more. In case there is any more questions pending, you are free to connect with Mr. Amarnath directly.
Yes.
Okay. So the next question I will just read out. Okay, so this is from Amit Jha. Amit Jha. If any individual has profit on Bitcoin for them, which ITR should be filed?
Okay. So Bitcoin comes under the virtual digital asset VDA schedule, and again, it has to be ITR 2. ITR 1 does not support VDA reporting.
Thank you. Next question is from Roop Singh. Can we show pension under section 80CCCD2, which is in excess of 1,50,000?
Yes, you can report that. Additional deduction up to 50,000 can be claimed under section 80CCD 1B for that. It's not 80CCD 2. 80CCD 2 is with respect to employer contribution. So if it is employee contribution, it is 80CCD 1B. And please note that this is available only under the old tax regime.
Next question is from Suresh Kumar. Whether employer contribution towards PF will be covered under the new tax regime for the financial year 25-26?
Yes, of course. Employer contribution is always covered under whichever regime you choose. The restriction is only for the employee contribution. So if it is employer contribution, it is available under both the regimes, even for the year 25-26.
Okay. There are some very good feedback from Saranya. Nice class. Thank you for the training. Thank you so
Thank
much,
you.
Saranya. Thank you so much, Mr. Amarnath. This, like we are getting feedback and people are considering this as a training that is even better. So thank you for all the insights
Thank
that you
you.
have
Thank
shared.
you.
And
Thank
of
you.
course, thanks to our participants also for joining in. Okay, next question is, so I'm skipping a few questions which are already covered.
Yeah.
There's another feedback from Umesh Sharma. Hello, Raki, session was very nice. It's my request to please send me today's session. Okay, so thanks to you again, all our speakers for today, Mr. Amarnath, Shobit, Shashank, who has joined us virtually. And of course, the recording will be shared. Yes. Okay, maybe this question, this is from Sudarshan M. In the year of 24-25, I worked 2 companies for that. How can I file in the ITR 1 for the same?
So if you have only salary income and interest income, as I said, you can report both the Form 16's income, salary income from both the employers in ITR 1 itself. You can add employer there and report it in ITR 1.
Okay. Next question is from Neeraj Gupta. How tax will be paid for short-term capital gain or LTCG? Will it be calculated automatically from AIS or we have to submit data of STCL or LTCG value and have to deposit separately before filing return as per given rates by the government?
Yeah. So see, ITR2 utility is not yet released. So at this point in time, we are not sure whether the data will be linked to your AIS and TIS in the ITR utility. So we may have to wait for ITR2 utility to get released and then check this option whether this is being enabled. Even if it is not enabled, anyway, at least you will get the summary from AIS, TIS. So my advice is just reconcile that with your capital gain statements and then go ahead and report that.
Thank you for that. Next question is from Priyanka and Shobit, maybe you would want to take this one up. I'm currently using greytHR portal for salary calculation of my employees. Will the employees be able to file the income tax through employee portal?
Hi, thank you for that question. If you're able to go to the marketplace and enable any of the 2 applications, ClearTax or Tax Planner, for your employees, they will have a choice to take any of the apps and file their taxes through them. So the action lies on you, and then your employees will be able to do it.
Sure. Thank you for that, Shobit. And I hope this motivates our customer to start using the Unite Marketplace if they're already not using it. Okay, next question is from Umesh Sharma. Recently, as per the Supreme Court order, pension on higher wages by EPFO for pensioners process has started. I want to understand about the areas which will be receiving in the upcoming months as a pensioner. Will it be taxable or exempted? If exempted, then under which section will it be exempted? My areas will be from 2016 till the date when updated pension is credited.
So the pension per se is not exempt; it is taxable. So you must offer it to tax under head salary income itself, and then pay the taxes accordingly.
Okay. Next question is from Athi Moolam. Where do you find Unite by greytHR link? I think Shashank is already adding the link, but Shobit, if you want to answer also live.
Yeah. Thank you for that question. On your left side of the screen, where you access every other module like leave, payroll, on that side, if you scroll to the bottom, you'll see Unite by Marketplace. In case you're still not able to find it, we will reach out to you and share the link, exact link, so you can do it.
Sure. Thank you, Shobit. Next question. This is a feedback actually from Neeraj Gupta. Thanks for clarity on my both questions by Mr. Amarnath. Good and informative
Thank you.
session. Thank
Thank
you. So there's an anonymous question. How to file ITR if you're working in 2 companies at the same time?
Okay. ITR is only one. It is not an employer-wise or company-wise. So report the income from both the companies in the same ITR and file the same.
Okay, reminds me of moonlighting. Okay, good luck with that. Okay, next question is from Gaurav. I have salary income and sometime dividends from stocks. So will it come under ITR 2?
No, if it is only salary income and dividend, then it is ITR 1 will support your filings.
Sure. Also, Gaurav has shared a feedback. Thank you for the wonderful session, team.
Thank you.
Thank you so much. There's another question from P. Reddy. Do we need to enable marketplace through admin login? I think Shobit is already typing the answer, but if you want to
Yes.
also, yeah.
The simplest answer is yes. Any admin can enable the marketplace and a particular application for their employees or themselves to use. So the answer simply is yes.
Okay, thank you for that. Our next question is from Shubham. How can I file the tax if I'm working for a company outside India and they don't have Form 16, but I filed Form W-8BEN for that employer?
Okay. See, W-8BEN is a form where you will give it to the employer claiming that you are a resident of another country. This is basically for the US employer where you may have to submit this. Though there is no Form 16, the US employer may issue either W-2 or 1099 MISC, 1099 miscellaneous. Even if these two forms are not available, you can go to your pay slips, collate the data, and then report that in the income tax return in India.
Okay. Thank you for that. The next question is from Mamata T. What if I'm getting monthly interest payout gain for FT of 25 lakh along with salary of 8,40,000 rupees? Which tax bracket will I come under?
That depends on the old regime, new regime, and all these. So, I mean, the moment you input these in the utility itself will calculate the tax amount. So you can just check that by applying the tax slabs based on the regime you would follow.
Okay, there's a feedback from Mehek. Thank you so much for the session. I think most of the, I'm excited to share that I think we have covered most of the questions. I think 95% of it, we did not take any repetitive questions, I think, but the rest are covered. There are only 3 last questions that I'll take. I know we are already at the end of 10 minutes, so I'll just make it quick. The first question is from Umesh Sharma. As per my last question, I know monthly pension received are taxable under head salaries, but I would like to understand about the areas received from the EPFO, whether areas received are taxable or exempted.
So arrears are also taxable, but I understand your question because the lump sum is received only in the 1 year, so the tax rate may jump to the new slabs. So, but you can claim a relief under Section 89 if arrears are received. So you can explore the relief section for reduction in the tax liability.
Okay. The next question is from Sriram. Is it mandatory to file Form 10IE for opting for new regime?
No, new regime is by default, so no need to file any form to opt for the new regime. If you are opting for the old regime and you are following business income, then only 10IE comes into picture. If you are a salaried employee and you are opting for old regime also, there is no need to file any form. You can just choose in the tax return itself.
Okay, I'll just take one last question. From Mr. Umesh, I think we did cover some questions, but let me just go back and see if there are any questions pending. I'll take that one as last. Okay. Okay, let's take this one. If there's a speculative income of only ₹4 done out of oversight, is it mandatory to file in ITR 3?
So strictly going by the rules, yes, you have to file ITR 3, but I understand for 4 rupees getting into that a complex form and reporting these things may not be highly worth it from a time point of view or a practical point of view. So you see whether, the ultimate tax liability should not change even if you report it as a business income or capital gain or loss. As long as that is being taken care, I don't see a major issue with not reporting in ITR 3.
Okay, there's one last question from Umesh that we'll take. Is AIS and 26AS alone the benchmark to verify, meaning if something is not reflecting in these forms, that need not be reported?
No, definitely no. So if you identify an income which is not reported in these forms, please go ahead and report. Could be based on the bank statement or could be based on the capital gain statements. Especially capital gains, I have seen many discrepancies in AIS and TIS as well. So if you are pretty confident that your statement shows those incomes, but even if it is not reported in AIS, TIS, please go ahead and report in your tax return. Similarly, if AIS and TIS is reporting some income which you think that it does not belong to you or you did not earn that income, please ensure that go and you provide the feedback in the AIS portal saying that this does not pertain to you or this is whatever it is. There are several options there to provide the feedback. Please go ahead and provide the feedback.
Sure. Thank you so much for that, Mr. Amaranath. With that, we are done with the questions. Again, I understand that there could be many more questions that you would want Mr. Amaranath's insights, because why not? He's shared great insights today. And as we navigate through the ITR filing, there could be doubts that will come to our mind. And he's happy to help you out with those. You can connect with him separately, directly, take it offline, and have those conversations later. As for those who were there, since the beginning, stayed till the very end, asked those questions, participated in the poll. It was lovely to have all of you here. Thank you so much for making this session very engaging, very exciting, and very insightful with questions coming from your end also, because that makes the session more informative and more comprehensive for everybody. So thank you so much once again. And there are so many resources that you can, look for in greytHR. Of course, we have a fantastic greytHR tool for hire to retire, but with that also comes the vibrant community that we have built at greytHR that also includes Grey Tribe community. It has over 9,000 experts and HR, community. It's a free community where you can ask questions to experts. Mr. Amaranath is in fact part of that community. So you can sign up for that and, ask any questions that you want, have those conversations there. Apart from this, we also have, of course, Parichay is live. We also have a great FM podcast where we invite experts to talk on relevant and trending HR topics that you as an HR professional should definitely not miss out on. In fact, there was a new episode that we launched today on ethical use of artificial intelligence in HR. So be sure to check that one out. And as promised in the beginning, the recording will be shared with all of you here today. And you will also get Mr. Amaranath's email ID. So you can always ask those questions later if those got missed out in the session today. Thank you so much once again for being a part of this session. And huge, huge thanks to you, Mr. Amaranath. It's always a pleasure to host you. And all the
thank you all participants, and thank you greytHR for giving me an opportunity to share my views on ITR forms. Thank you.
Thank you so much, and thanks to our product managers, Mr. Shobit and Shashank, also for being here with us today and helping us understand how all of it can be, easily done through the greytHR portal itself.
Thank you for the opportunity.
Thank you. Now, before you all leave, there's just one last thing that I would like to share with all of you. This is about the upcoming webinar, our upcoming Parichay session that we're having on the 24th of June at 4 p.m. So if anybody wants to register, please do that. It's on HR's role in personalized growth, rethinking L&D impact. We'll be having two fantastic speakers with us to join us for this session. So you can register for it right now. You can share this registration link with everybody else also in your HR community who you think would benefit from this session. I'll leave it here for another 5 minutes for you to go and check out this registration link. But once again, thanks to each one of you for joining us today. And until next time, thank you so much. Have a great evening ahead.